So we had another insane week of dark pool prints. If I look over here on Shutterflow, you could see 5.5 billion at the 475 level, 1.8 billion at the 472 level, 5.4 billion at the 472, 4.2 billion at the 472, etc., etc. As you scroll down, this is only from last week. You could actually filter up here on the dashboard for January 1st to January 5th, which we didn't even have a trading session on January 1st. So this is between 4 trading days of last week. And if you've been watching this channel for a while, you know that having a $5 billion print in terms of the dark pools is very unusual. And the fact that we had 2 back-to-back ones for just last week alone is super unusual. Plus this 4.2 billion one, and all of them were within the 470s range, which brings me to my next point here. It's very critical. Considering we've had so much premium in the 470s, this is likely a form of distribution after the insane rally that we saw to end 2023. And the fact that we've had this much distribution in terms of premium, again, super rare to see this type of premium up here, leads me to believe that we are setting up for a larger pullback at some point in Q1 of 2024. Now, one caveat to that: I don't actually expect this current pullback that we're in right now to be the large one that I'm expecting at some point in Q1. Like I just said, I actually expect it to happen after some type of a bounce from around here. So if I bring you to the S&P 500's chart, just for the index instead of the ETF, you can see here we're within the golden pocket range on the 15-minute chart here for the S&P 500. I dragged the Fibonacci tool from the high over here to the low, or at least the previous low that we had during this consolidation phase in early December of 2023, since this was a clear uptrend sequence. And we're just now retesting about the 0.5 retracement level of this golden pocket Fibonacci, which is that golden pocket range that typically provides a strong bounce. So because we're in this range right now, I expect some type of a bounce in the short term, at least into end of month, before a larger pullback like I just mentioned on the S&P 500. In terms of a target for that larger pullback, I actually expect us to retest this key trend line over here. This is the one that goes back and starts at all-time highs. So January 4th of 2022, drag it down to go to that high before the large correction we had in the fall of 2023. And you can see we broke out of it recently in November/December of 2023 and continued up higher. Typically, these downtrend breakouts end up having a retest very similar to back here. If you remember, the 2022 downtrend starts at the same place, that January 4th all-time high, and you could drag it across all the previous times it acted as a resistance. We ended up breaking out of it over here in January of 2023 and then retested it during the banking crisis. Silicon Valley Bank ended up having this minor correction in Q1 of 2023. We retested that trend line and then continued to the upside afterwards. I actually expect something very similar in Q1 of 2024 now, where I expect there to be a retest of this trend line before some more upside afterwards. So I am tracking that. I'm tracking some type of a pullback at some point in Q1, like I just said, but that should occur after we have some type of a short-term bounce from this golden pocket here. And the clear confirmation signal of this bounce occurring will be a breakout above this minor supply zone right here, about a 10-point supply zone, because between 4,720 to 4,730, if we can get above this, there's a high likelihood we go to all-time highs, grab all-time high liquidity, and then have that pullback that I just referenced there. So I know it's a lot to process, but keep in mind, at least in the short term, I expect there to be some type of a bounce from around this range. Ideally, we go back down to around 4,650-ish. That'd be my ideal entry at the moment for a tactical long setup to go back up to the high 4,700s, low 4,800s. But then after that short-term bounce that I'm expecting, which should start around this week or so, then I expect there to be that larger pullback, which is supported by the dark pool prints that we saw within the past week, as well as the week prior. If you remember the week prior, we also saw a ridiculous amount of premium, pretty consistent with this past week as well. And whenever you see this, especially at high prices after a rally that we had to this extent from 2023, just an insane upside move, it tends to be a lot of selling. Whenever there's a lot of distribution via the dark pools, there tends to be a subsequent pullback afterwards. So there will be a time to short soon, although not quite yet. Expect we'll get one last kind of like hurrah here before a larger pullback. And of course, there will be some type of a bounce once we do get that pullback, like I mentioned earlier in this video, around this downtrend line. If we do end up hitting around the mid 450s or so, then we can continue up from that. But at the moment, if we're just focusing on this week, I'm looking for some type of a short-term bounce from around 4,650 if we can touch it to continue upwards. Also, here's a mini educational tip for you. How did I derive this supply zone here, which is actually a very crucial supply zone since, like I said earlier, once we get above this, then it should be a clear shot back up to the high 4,700s, low 4,800s. The way that I got this supply zone is pretty simple. You can see here, there's been numerous rejections from this zone just within the past couple sessions. We saw over here, just on the 50-minute chart on January 3rd, so that's last Wednesday, hard rejection from this range. Same exact thing over here on Thursday, and then the same exact thing on Friday. So 3 days in a row, hard rejection from this range. And if you look over here at the daily chart, you can see the rejections as well. They're actually pretty bearish rejections just in terms of the daily candle, hence why I believe we'll go a little bit lower here this week before that short-term upside move that I'm expecting that I talked about earlier in this video. But you can see here we gapped down into this supply zone, had a hard rejection on this daily candle. That was last Wednesday. We retested that supply zone again last Thursday, like I just showed you on the 50-minute chart. Another hard rejection with a very bearish daily candle. And then the following day, we retested it again with the same exact result. So typically, whenever you have 3 rejections from a key zone, it tends to mean there will be lower price discovery after. Since there's a lot of sell pressure up here, just basic market dynamics, you're going to want to look to see if buyers are strong a little bit lower from that level, which would be around this golden pocket range, around 4,650. And then if they are, then you can take another crack at that level afterwards. But this is a key level to watch for, since like I just said, we do get above this, and when we do get above this, which is my expectation in the short term, then there will be some type of rally to at least fill this gap from up here and then continue up potentially higher before there's a larger pullback afterwards. But this is a key range, 4,720 to 4,730. Definitely mark it on your charts since it is critical and will act as a resistance until we break above it and have confirmation above this range, which then, like I just said, should result in some type of a strong upwards move. And lastly, I just thought I'd talk about IWM very briefly here, just because on Friday we saw a lot of bearish flow. It's been a while since we've seen flow like this on IWM. We, of course, started the day off with a pretty bullish print, 5 million in premium for the 190 strike. But after that, it was just hammering the puts in terms of large orders. And you can see over here that this was early in the morning, 10:14 Eastern for this 5 million print. And then a couple hours later, then that's when they started to have more so of a bearish bias. But as you can see over here on the chart, this looks pretty bearish at the moment. Would expect there to be a 188.41 retest here in the near term. It kind of fits my thesis for the S&P 500, where we'll see some type of lower price discovery and then a bounce afterwards. But at the moment, just considering it went up to around 206, it looks like there was some buying exhaustion, and we saw a very sharp down move from here, even more so than the QQQ, which is a pretty sharp down move during this minor pullback that we've had so far. So I expect that this will at least have some type of a bounce from around this 188, 186-ish range, kind of like the S&P 500 will, but it probably will underperform in comparison to the rest of the market. Probably won't be as strong as we saw from end of 2023 over here, followed by a larger pullback afterwards, which I'm tracking along with the S&P 500, of course, like I shared earlier in this video. So thought I'd share this, and this is probably why these traders are adding these March expiration contracts. 193 strikes are just a bit out the money, with a lot of premium behind them. They're probably looking, at least in the short term, for more downside to around this sub 190 range before there's a short-term bounce from around there. So this looks fairly bearish at the moment. You can see just based on the daily candles, a very difficult time picking back up. Strong daily candle confirmation to the downside last Wednesday, and then 2 back-to-back rejection days just based on the wicks here. So thought I'd share that very briefly, but really my main focus, at least for this week, is catching a low on the S&P 500, at least in the short term. And then later on, there will be some fun with shorting because, again, like I said, there's a lot of sell pressure up here just via the dark pool. So you're definitely going to want to stay tuned for that future short setup. And other than that, I'll see you guys in the next video.